Hi, and welcome to another edition of Weekly Market Analysis by tradersclub.co.uk. My name is Philip Conchar, and let's start this with a disclaimer. Basically, this should not be considered to be advice for your trading or investment. We are simply sharing the information for the benefit of the club members. Okay, it's been a while since we've posted anything in a free website, so let's start this with S&P. We had a massive sell-off in the markets as a result of FOMC statements on Wednesday last week, and that was followed through on fairly severe selling on Thursday as well. Markets lost some significant support. This is a daily time frame of S&P. We had a succession of lower highs and lower lows, which appeared to be bullish flag, and this here appeared to be a breakout above that flag. Basically, markets were just waiting for a further confirmation by FOMC. The price was actually ranging between 1650 and 1600 level. And the actual loss of this 1600 level and also 50 period moving average is actually quite concerning. The fact that we closed the week below 1600 appears to be quite bearish. Oversold bounce backs are quite possible on the way up. We could challenge a number of resistances, but as long as we assume that this rising support trend line it's acting as a potential resistance now, this would give us a bearish bias towards what might happen over the coming months. Previous high and 1600 level was majorly important for us. Below that level there is not much support for S&P 500. Around 1575, 1579 level can act as a bit of a support, but other than that, 1573, and then we are going into this zone of 1535, 1540 level. Alternatively, if the price moves higher, 1608 can act as a temporary point of resistance, followed by 1618, which is 50 period moving average, and then 1631, which is 20 period moving average, and also this rising trend line here as well. This is the hourly time frame of S&P. We can see a clearly defined trading range between 1650 and 1600. The loss of that level is quite concerning, as I said. So on the way up, resistances are 16087, call it 1609 because of the 20 period moving average. Also 1625 before we move into 1630 level. On the way down, I would use the same levels for support as per my previous chart on the daily, which is 1573 followed by 1535, 1540. So some quite significant levels in play. Stochastics oversold, MACD possibly curling up, and RSI 14 is indicating oversold bounce back. So potential oversold rally, it's quite possible. The price of gold had another push lower. We lost the support of 1321, which was a previous low. This is quite bearish for gold. These levels should really hold, otherwise we will very quickly drop to 1221 as a next logical price extension on the way down. Alternatively, on the way up, the price of gold would need to challenge 1310, which is the lower Bollinger Band, followed by 1321 low, 1336 low, and also 1345. So the price can move higher, but there is obviously 4 or 5 levels of quite a significant resistance on the way up. Alternatively, on the way down, it would appear to be a part of lesser resistance. However, we are in oversold territory on stochastics and also on RSI as well. The price of WTI crude, light crude, traded in US, created a bullish breakout above 97 level, and as a result of FOMC statement, subsequently sold and returned back into this trading range. Oil appeared to be in a bullish breakout stage, and the key level for that was 97 level. This 97.35, 97.17 should acted as a major point of support. However, we lost it, and then as a result of that, we subsequently dropped very quickly to retest this 95 and 93 level as well. Levels of support on the way down would be around 93, followed by 92.33, followed by 92.13, followed by 91.26. This inverse head and shoulder formation could still play out, but it would ask for the daily close above 97, 98 level again. Alternatively, we could be going back for a further consolidation in this trading range. Our stochastics is curling from the overbought, same as MACD, is confirming that this pullback actually has some legs in it, and RSI as well is going back to neutral as well. So stronger dollar, weaker oil. And obviously this is the price of dollar index. We had a substantial pullback in US currency, which caused euro dollar and cable to rally. And the concerning bit for gold trade would be we had a weakening dollar and a softening gold prices and silver prices in general. Now we have a rally in dollar, and that sell-off in gold carries on, and obviously softer oil prices, and even copper was much lower as a result of that as well. So a rally in dollar would cause weaker euro, weaker sterling, and resumption of dollar yen and dollar Swissy trends. So we have support on the way down at 82.09, which is 20 period moving average, followed by this 50 period retracement, fib retracement at 81.73, followed by 81.06. All of these levels would act as a level of support on the way down. Alternatively, if we choose to break higher and US currency moves higher, then obviously 83.32, this previous high, 83.66, and very importantly 84.60 would act as a point of resistance on the way up. Stochastics is oversold, MACD is confirming with bullish pinching as well, and histogram is moving from negative to positive, and RSI as well is curling up. So this is very positive for US dollar. Hopefully you enjoyed it. I'll try and publish these weekly reports from time to time, but you'll find them on our traders-club.co.uk website. My name is Philip Concher, and hopefully you enjoyed it.